Good evening traders, it's Simon at Kairos Capital Markets. Today I want to talk to you about the reasons why you make a longer term watch list and how to use them and how you profit from them. So far, last week I wasn't able to make a full watch list. The reason why I was in hospital with a newborn, so it takes a bit of time sometimes away from this, so I never actually got to create my quarterly watch list. What I've been doing this evening, I thought I saw one or two that look really quite ideal to explain to you why I make them, how I use them, and how you can profit from these as well. So, as you know, I don't take many trades at all. I probably take between 3 and 10 trades a month as an average. Most of the trades I take are more longer term. You could say swing trader, but yet I do enter. All my entries are entered on the 1 hour chart or even the 5-minute chart, but yet they have targets and expectations over a higher time frame. So we can use the example now of CAD yen. The reason why that is because it's an ongoing example of exactly what I look for, how I trade, and also I want to show you how you can profit hugely from trades like this. So, for example, CAD yen, I put bullish to top of triangle. That's all I put on this, and this is the quarterly chart. So when we go to the quarterly chart, here is what I'd say is some form of triangle. The top line's not been confirmed. Depending how you want to draw it, you could be so subjective with this, it's absolutely ludicrous. But either way though, it doesn't matter what you do, it's still a two-touch trend line, and it could be a triangle forming. The bottom trend line is definitely key. One, you could say, well, I draw it, not really, but 2, 3 touches minimum with a fourth of the wick. So for me personally, that's an absolutely perfect trend line there for me, in my eyes. You got a key level at 73. Not that it really matters, we're nowhere near it. So notice how the quarterly 50 EMA on this chart has not really been respected. Been respected a little bit, then come through, then chop up, blast through, reverse, come down, respect, then start going back up again. So this is what I'm looking for. That's why I'm looking for it. So the next thing of this is, so you understand, I entered CAD yen on the 8th of June using the 1 hour chart with a 60 pip stop, but I'm targeting 100. So so this level here, 81.53 I entered in it on the 8th of June. Just give you an example here. So I want you to understand how powerful this style of trading is. 81.53. with I think it's a 61 pip stop or something, and my target is 100. And there you have something so small I can't even highlight it. 30.2% trade there. You know I put 1% risk on the trade. So that's what I've targeted so far. The reason I'm doing 100 is because of the head and shoulder pattern, the expected distance. 100 is a nice round number. And if it stops at 99.5, I'm not going to cry over a couple of pips, in all fairness, you know. I mean, bear in mind at the moment, this trade should be something like a... Where is it here, the pips on this one? I can't tell it. There's the pips on here. In profit, where is it? Where is it? I must be at the top of the thing. Let's have a look. So it's so far away. Yeah, so 1,850 pip trade this is. So I know people want 20 pips a day. To me, what's the point? Go for the big trade, it's easier. So anyway, so that's what we're looking for in this trade here. So how do I come to that conclusion? So it tested the trend line quite nicely, popped back up, and actually created a bullish price action on the weekly and the monthly and the daily as well, obviously. So here's your head and shoulder pattern, inverse, sorry. Your left shoulder formed there, neckline at 88 there, pull back down to 76 area, we got the head there, come back up to 88, test the monthly 50 quite nicely, pull back down to 81, 82 area, the same as the left shoulder here roughly, and then we accelerated upwards. So what I'm looking for now is this, is really a break and retest now of this monthly 50. The two key areas here is the 88 level and the monthly 50, and we'll pop down the lower time frames to see that. So the lower time frames will be the weekly chart, and you see on the weekly, here's your this is what I saw here, and then this is how we accelerated out to the upside. So we had the weekly 50 EMA on against us as well, which is always not the greatest in the world to have, but it was the pattern I was trading, nothing else. So what I'm looking for now is this, really, in all fairness. Personally myself, this chart needs a pullback. Having 3 huge bullish engulfing candles with a doji in the middle, to me that says it does need a pullback at some point on the daily. Because this is a run up, the daily is trending up. So what I'm looking for now, like I said, is a pullback down to 85. to continue the bullish trend. So that then means you've got put in a higher low. You could then go, oh look, there's a triangle forming, and you could do something like that there. It could be something like that. You don't know too much at the moment. We just have to wait and see what happens. We go to the daily chart for this and we see what happens. And there you could easily say that a pullback down to say 85 would be key there. So let's take this trend line out there. There's no need for it. So if this chart pulls back down to 85 from this point here, I would put an entry on 70 pips, and again target 100, another 21%. So 21%, that's what I'd do. But the question is, why do I like 85 so much? Let's just take that out and let's have a look. So the daily 50 has come up to the 85 level. It's been key support and resistance all the way through for, well, since 2016 it's been there as well. It has been there in the past. Let's just zoom back a bit more. And you've got a little touch there, little kiss there. There. 85 is absolutely key. Simple as that. So the fact we broke it to the upside is fantastic. So if you missed the initial trade, which I took at the bottom here, just to give you an example, like I said, 81.53. I want you to understand what we saw there. 53 with a 62 pip stop. That's where we took it here on the 8th of June. This doji there, quite literally took it on the doji. Now some people say it's high risk, but to me personally it made sense. So I've put almost a day trade stop on the quarterly chart. That's what we're doing here, but we break it down bit by bit. So the next idea really is to pull back down to 85. That's what I think is really the key area now. I'm going to delete that there for a minute. So why do I think that's key? Let's go through bit by bit. So except for the key level, with the daily 50 coming up, it pulls back down, it puts in a higher low, which then confirms this bullish trend here on the daily, which would then hopefully then sink through to the weekly. So when this pulls back here, puts in a higher low, we are going to be then showing a bit of deceleration of 88, which could be bearish to some people, but personally myself, I think it'll break through that. If however it goes up and stops and rejects 88, we've got several things we can do. We could actually take most of the trade off or something, the profit off, and so it happens, let something run. You've got lots of options there, but this trade's a winner for me no matter what happens. So this is your Fibonacci as well. Fibonacci 0.5 is around there, 0.38. The little zone here is quite nice. If you pop it up to anything around here, the 618 comes in as well to play. So no matter how you look at it, this zone here is absolutely key. So we pull back, get a bit of deceleration. You see these two little dojis here, just maybe two dojis up here or something. A bullish and little mini bullish engulfing candle there, inside candle there. Let's say you get a little low test, like doji and low test. Anything like that happens around there would be beautiful to see, and you've got all the energy behind you to the upside. That's what you want, guys. Then you take your trade here. I can scale into this trade because I've already got profit from the first one, so I could effectively, as you know, let's do this again. Sorry, 81.53. There you go. So if I come up to say this level here, I've got 4% in profit already at this trade. So what I could do is, when I do this next trade here, I could effectively do 4% on this trade as risk. Okay, guys, and then target the major 100 level. Okay, so that 21 times 4 is going to be 84%. So what I'm going to do is now I'm going to write this down bit by bit. Yeah, you got 84% on the first. You got 30% on the first trade. Got 84% on the second trade you have. Okay, guys, and now the third trade could have been another one on. Remember the monthly level of 88. Let's not forget that 88 level on the monthly. Go back and show you. 88 is that key level there with the monthly 50. So break and retest of 88 would be nice and clean. Then it would be. We would be trending upwards. Let's go back down to the daily, and we'll go there. And again, I could effectively, if I wanted to, move this up to this level here roughly, which means this trade has 9%. This trade would be then as well, for example, 12% there. So I could effectively, if I wanted to, put this 12% into here, or just use the first trade put into there, and the total risk of 3 trades was still guaranteed to make me money there, if that makes sense. Or I could just do 6% into this trade. Doesn't matter what it is, I can do anything I want here. That's the beauty. We've got 9% running plus 12% running. So 9 plus 12 is 21%. I can effectively put 15% into this trade if it does the same thing as here. So it could be 15 times 15. I've only taken 3 trades. Got 3 trades. That's all I've taken. Let me show you something here. Once this loads up, and why it's taking so long, I have no idea. Clearly, it doesn't want to work, guys. I don't know why it can't load calculator up. There's everything else here, no problem at all. Don't want to load the calculator up. 15 times 15 is 225%, guys. So in total, this one trade can earn me 339%. It could. That's how powerful this is. And if it fails, you still make, if this gets stopped out, you still make your 9 plus 12 is 21. You still make 6% here. Plus you get paid to hold this trade open overnight as well. Now, some people would be crying out for anything remotely near 50% per annum. And this is how you structure your trades. That's exactly how you do it, guys. And this is why using the higher time frames, like, and making watch lists to see this. Now let me show you something else very quickly. These trades here are all looking through so far. I've got to write more out. I have about 50 pairs I go for. Now obviously don't win every trade, don't get me wrong, you never win every trade. But this is why my results are always so high. Because trades like this, how you structure them bit by bit by bit. But that's how we do it. Okay guys, so I hope you've learned something there, why I firstly do the quarterly reviews and the weekly, monthly reviews and everything else, and also I hope you've learned how to do them. So what you do is a quick recap now on this. It's very simple. You look at the quarterly chart and you have a view. My view here is bullish, simple as that. Why? Trend line, it look just the trend line and the triangle shape itself. I think it's most likely to go to around about 100 area in 3 months time. This, you got this candle here and the next candle as well, so 2 candles get up to 100 is quite plausible, no problem at all. That's 6 months worth of candles there, that is, guys. So 6 months gets 100, no problem at all. In 6 months it did move from 98 down to 86, no problem at all. So you can go from 88 to 98, no problem, no issue at all there, guys. So yeah, you know, you can get that, no problem. So the distance on this is not actually difficult to get to. Then obviously, then if you think it's bullish, why do I think it's bullish? Well, you know why I think it's bullish. We've been down to the monthly chart. You've seen I looked at the head and shoulder pattern, as you know already, and you can see we put in you could say high low there. This here is your first high low. That one there is a high low. So we're looking for a higher high. Simple as that. So anything around about 90, a close above 90 is a higher high. Simple as that. Who are you looking for? You're confirming the bullish presence you are. And then when you break down to the weekly, why do I think that's all going to happen? Well, there's an inverse head and shoulder pattern on the weekly, which we've shown already. Okay, that's fantastic. Thank you very much. Put a couple of levels in it. What do we look at? 88's neckline. There's the first neckline. There's the second neckline. Simple as that. Left shoulder, head, right shoulder. Here's your neckline, perfect, thank you very much. So where's the next key level? Well, let's go on the daily and have a look at the daily. What do we have on the daily? Where is the next massive key level? 85. 85 is the key level, as you know. So what I'm looking for now is this. I'm looking for long positions off 85, end of, that's it. And I'm looking to scale in with this trade to start with. This is one pair, guys. Just one pair can do this. And you just do the same again on the daily, the 4 hour and the 1 hour. That's all I do. It's exactly the same. It just moves a lot faster on the 1 hour chart, and to be quite honest, I can't be bothered to sit at the computer 24/7 looking at every single minute chart, 5 minute chart, whatever else, where you can make huge amounts of money here just by trading very safely and very little. So I hope you learned something, and I'll speak to you soon. Take care.